Hey everyone, we're going to talk about how do we model Solana. How should we value Solana? The talk is what Wall Street wants. What are the metrics that actually matter for Solana, for valuing Solana? So a quick background on us. So Artemis, we are building Bloomberg CapIQ for those from TradFi, CapIQ for digital finance. I sold my soul and worked in TradFi. I was a venture capitalist back in 2014, investing in software companies. And then most recently, I was at a hedge fund investing in fintech, crypto, and software. And today, I'm really proud to say, Artemis, we back the largest asset managers in the world. Our customers are like Fidelity, T. Rowe, Van Eck, Franklin Templeton. And I'm about to share with you a really big problem, which is Solana trades like oil and gas. It trades like a commodity. Solana trades like based off of supply and demand, based off of flows, unlike a high-growth technology asset, which is why I got into crypto. I wanted to invest in the next big high-growth technology business. Solana doesn't trade like NVIDIA, where when data center revenue goes up, NVIDIA stock price goes up. And I literally did this at my last company. I worked in venture. I was like, OK, what are the key metrics that matter for software and technology businesses? Let's commoditize it. Let's turn it into a product. And our customers were Sequoia, Benchmark, Tiger Global, Altimeter, et cetera. And that's the mission behind Artemis. What's the rule of 40? What's the ARR equivalent for blockchains? Like, how the heck do we value these layer ones, these L2s, and these protocols? And our team comes from BlackRock, Citadel, Ribbit, et cetera. So here's the key learning that we realized over the last 4 years. TVL, developer activity, daily active addresses, transactions do not matter to Wall Street. It does not matter for valuation. We tried that. We had market cap to TVL. We had market cap to daily active addresses. That was one of the core metrics that we made comparable. They don't move markets. It just doesn't matter. So today I'm going to propose what we can do to solve that problem. So Solana doesn't trade like oil and gas and trades like a high-growth technology asset. So taking a step back, like what actually works in crypto today? BNB is one of the top performing tokens this year. Revenue was up 3x. Price, market cap was up roughly 3x. Hyperliquid. Everyone loves Hyperliquid. Hyperliquid revenue was up roughly 2.5x, and price was up 2x earlier this fall. And in the equities market, everyone loves Robinhood. Robinhood revenue's up like 50% year on year, and stock price is ripping. And in 2025, like the 3 tokens that are positive that actually had a positive return, they're Hyperliquid, Tron, and BNB, and they're all doing 100+ million of revenue, buybacks, value accrual to token holders. So yes, while Solana is #1 in users, #1 in transactions, #1 in developer growth, #1 in application revenue, so the revenue that applications built on top of Solana get, #1 in trading volume across all the different chains, #1 in new tokens that are being launched. And yes, Solana is super resilient. There's been no downtime in the last over 22 months. Solana has the highest actual transaction per second. These developer user metrics don't matter. Like Wall Street, buy side, sell side analysts, they don't care. Like it doesn't actually affect Solana's valuation. So here's the proposal of what we think solves this problem. We should position Solana as a marketplace between users that bring capital and financial applications. A marketplace just like Uber's a marketplace for riders and drivers. Riders measured as monthly consumers. The GMV equivalent for drivers is gross bookings for Uber. Just like Airbnb is a marketplace for hosts and guests, we measure GMV as gross bookings and guests as nights booked. Solana is a marketplace for financial applications that developers build and users that bring capital, institutions like BlackRock or a Phantom wallet user. And the core metric that matters is global transfer volume, the GMV equivalent for Solana. That's why we call Solana Internet Capital Markets. Solana is a marketplace for capital. And these metrics look pretty good. If you compare them to like an Uber and Airbnb, these public companies, like these are all pretty solid metrics. And the best part of having this like trading volume, transfer volume as the core GMV metric that matters for Solana as an ecosystem is you could break it down into trading volume, so like perp dex, spot dex volume. You could have it broken down by payment volume with the Cash App, with the Western Union deal. You can actually model these things out over time based off of, hey, like Solana signed Western Union, signed Cash App, it's going to bring this amount of TPV. Or you can break it out into like other volume, RWA volume, DPIN volume, et cetera. And one of the challenges I got on Twitter from Mert, actually, was how do we model Solana to $1,000 per token? So with this marketplace framework, it's actually not crazy. If we assume Solana gets 5% of the entire tokenization market in 2030, which is BCG forecasts basically 9 trillion of assets will move on chain in 2030. If Solana captures 5% of that, that's 450 billion of AUM that moves on chain. And if we assume a single dollar that is on Solana moves roughly 60 times, we call it the velocity multiple. For reference today, Tron does about 90 times. So a given dollar of stablecoin on Tron, it moves around 90 times in a given year. You get 27 trillion of this GMV metric of transfer volume. And roughly, if you take the 2024 take rate for Solana, so that's like fees spent, Jito tips, et cetera, that's 27 billion of revenue. And you can model out incentives, OpEx, other pieces, and you can get to 20 billion of net income with a 50 times price to earnings multiple. You can get to $1 trillion market cap and a $1,000 token. This is what Wall Street wants. This is what all the investment banks we work with, all the buy-side funds, all the asset managers that talk to us want. They want a simple model, a simple framework of, hey, AUM, let's track the amount of capital that's on the chain, transfer volume, where is it coming from? Is it payments? Is it trading? Is it from RWAs? And what is the take rate? What is the ultimate revenue? This is what Wall Street wants. And a lot of the asset managers, a lot of our customers, we share this model, and it's highly resonant. A lot of them come to us and they're like, we just want like a free cash flow, like an earnings, a revenue number that we can write a report on and convince additional hedge funds and asset managers to buy Sol. And so this model is highly resonant with Wall Street. I think there's basically two paths forward for Solana. Solana can continue to trade based off flows, like oil and gas as a commodity, or Solana can trade like a high-growth technology business like Robinhood, which trades on earnings, trades on 74 times earnings. At Artemis, we strongly believe the world is shifting towards fundamentals. We stand for fundamentals, and we work with some of the most prominent chains and protocols to help describe what are the metrics that matter to Wall Street, to the biggest asset managers, to the biggest liquid token funds. If this model resonated with you, that's the QR code. Feel free to rip it apart, flame me on Twitter. And if this general methodology of like fundamentals matter, here's how you should value blockchains resonates, we'd love to chat. Thanks so much.